I negotiated this lease for you guys, 5 years ago. I know what's in that lease, and the option to expand into that space is at a fixed price, and it's in the deal already, and it's half the rent of what he's trying to get you for right now. Often when a company is making a decision to expand, they don't want to have to wait 18 to 24 months for their expansion. If I see these companies coming to see me, okay, well, I need space, I need 5,000 feet. Okay, he's going to be calling me for 15 in 6 months.
Yeah.
Right? Because I see his business, I know where it's going.
Yeah.
Right? And so I need to negotiate a way to get out of this lease, or we need to figure out a mechanism to have.
So it's not just the needs now, it's that you also try to figure out the needs 10, 12, 15 months from now, so that you can negotiate a proper lease that won't get them stuck when they need to make moves in 12 months from now. All right, Shlomo. So we're jumping into the podcast, and I would want you to introduce yourself, and so that the people watching know who you are, what you do, and then why you even got into what you're doing, pretty much.
Yeah. So I'm Shlomo Benarroch. I got into this business in 2008. I was studying accounting. Went to university in New York. Studied accounting before I got into this. I always wanted to get into real estate. Getting into commercial real estate was a bit of a passion of mine. I wanted to get into investments and investment sales and that type of stuff, because I had this whole financial background. But then the way things fell, and the opportunities that I had were to get into industrial real estate. And then as I got involved in deals and started seeing what was happening in the industrial world, I fell in love with it.
How long have you been doing it now?
I've been doing this for about 18 years now.
Oh, damn.
Yeah.
So you know what you're doing.
Yeah. I've been doing this for 18 years
and
now.
the same Montreal market.
Same Montreal market. I've been working industrial in the Montreal market for 18 years. And I love it. And I've experienced the ups, the downs of the business. I started at a crazy time when it was the crash of 2008.
Yeah, I understand.
The whole market crashed, and so I started, and then like a month later, the whole market crashed.
Oh my God!
And then it was just, but I always say it's like the best to start at a time like that, because you get the worst of the market at the beginning, and then you get to really get a better understanding, and you have to tough it through, and
So you've seen all the cycles, and pretty much
exactly.
You don't get discouraged when it gets harder.
Exactly. Yeah.
All right. Good.
Yeah. I would even go as far as saying during COVID, when the market kind of, we didn't know where it was going to go. There was this like little hit down before it spiked up. That was the time when I said, okay, well, look, people are nervous right now. This is a time to hire good employees, and so my assistant, who's been with me for a long time now, we hired her right at the beginning of COVID, when everybody was letting go.
You're saying a long time, but COVID seems so close to me still back then. Like 2020 seems like 2 years ago to me.
It is, but it's 5-6 years ago.
Yeah, so. I know, it's crazy. It seems so like close to me. Anyways, we get the point. But, okay, so now I just wanted to know, okay, you do industrial real estate, 18 years.
Yep.
And what kind of clients do you work with? You have like owners, and you have business owners as well?
Yeah, I would say primarily we deal with a lot of PME Quebec companies. That's most of who our clients are. But our business has evolved a lot. I grew this business with my partner Gabrielle, the two of us, and so we've evolved it to a pretty big business. And so now we do a lot more institutional as well. We represent a lot of landlords, bigger landlords, so that are across Canada. We represent companies that are looking to expand. A lot of different industrial companies in warehousing or in manufacturing. And we walk them through the process. So whether it's the landlords and just assisting them in renting the space, or whether it's companies that are looking for space either to buy or to rent, we walk them through the entire process from beginning to end, understanding the market, understanding what's out there, understanding what to expect on the market, the timing it'll take to get certain deals done. And understanding their needs, getting a real understanding for their needs, what they need, and helping them find the ideal space.
So you just said, let's stick down like to business owner, let's say. And could you explain to me the process of me? I'm now trying to expand my business, and then I come to see you because I need new space because I'm expanding. What is it? When I join you, when I talk to you, what's the process from starting to talk to you to actually working with you and finding a new space?
Yeah. So typically, when a new client is on board with us, they're looking for space. They'll come to us. We're expanding. We'll show them the services that we're offering. The services that we're offering them is essentially an understanding of what's out there on the market, an understanding of what are their needs and how can we best match what's out there on the market. Where we're able to go above and beyond is that we're able to be creative in terms of finding options on the market that might not necessarily be what you're going to Google and find online.
So off-market deals.
And so not necessarily off-market deals, but sometimes it'll be working with landlords. Hey, we've got this tenant. They're looking for space. We don't need it for another year from now. You're only marketing your spaces where you have leases expiring in 6 months from now, but what's expiring in 12 months from now? Or 18 months from now?
Yeah, I can understand.
Right. And so then we're trying to find, those ideal spaces for these clients, because every business is a little bit different and has different needs, and every space is different and is configured differently. Right.
Okay. So basically the client comes to see you, and then you do some homework on their business and their needs to figure out what they need and what they want in the next 6-12 months. And then you go see landlords. So basically you go shop around with landlords to figure out a space that would fit specifically well for their business, pretty much.
Yeah, exactly. And then in industrial, there's like some specific stuff that's unique with each building, and it's what kind of clear height is there. Are they going to be racking a certain way?
So clear height would be uninterrupted from floor to ceiling.
Floor to ceiling. So from the slab to the bottom of the ceiling joists.
Okay.
And so how much space is there? And then it's a question of, why do you need that clear out? Do you have special equipment? Or is it just that you want a warehouse? So if I can get you cheaper space with lower ceilings, and you still have the same space to go larger, does it make sense for you or not? Or do you need more cubic feet? So you're going to go higher. You'll get more in. It'll be cheaper. It might be more expensive per square foot, but it'll be cheaper per cubic foot.
Okay, I understand.
So these are kind of some of the intricacies. And then, are you manufacturing? What kind of electric entry do you need?
Okay.
And so then we'll review that. And then, so what is your machinery drawing? What's the maximum it's going to be drawing? What kind of amperage do you need? This comes up a lot of manufacturing tenants, and in the future, if you're going to be, right now your needs are this, but let's say you want to add 2 or 3 production lines in the future, you need to ensure that the building has the capacity to support those lines in the future.
Like your growth in the future, pretty much. Okay.
Which we see sometimes when people are in manufacturing.
Okay, so, and let's say you find a space that's actually good for the client, a manufacturing client, let's say, and then, but you find that the capacity is not enough. Is it always like a landlord that's doing the tenant improvement, or that's adding capacity, or is it the tenant that's taking it on his own? Or is it deal specific, or is there a general rule?
Yeah, it's deal specific. We see all kinds. Some landlords prefer to take it on. Some landlords prefer to say, just, we want the tenant to deal with it. Most of the base building stuff is dealt with by the landlord. And then when it comes to finishings, the tenants usually will take over. But again, it is on a case by case. I've seen all different kinds of scenarios, really depending on the preference of the tenant and the landlord.
Okay. And then you were saying there's two different types of clients. So clients looking for the space, and landlords pretty much leasing the space. What's the different approach? Let's say I'm a landlord now and want to reach out to you. What's the process that's different, obviously, from the person looking the space now?
Yeah. So our business is made up, I would say, about 60% of the time we're representing landlords or vendors, people selling their buildings or people leasing their buildings. 40% of the time we're representing tenants, helping them find space and or find a building to buy. When we're representing landlords, the process is a little bit different. I say we're like the marketing arm of these landlords companies. It's, how do we market the space? How do we make it attractive? How do we get the brokers on the market to bring their tenants to us, so that we maximize the exposure of the property? We use a lot of social media. Okay. So we find that social media today works very well. Instagram, LinkedIn, Facebook. hopefully TikTok soon.
I haven't got into that either yet.
No, we haven't got into it, and it's on the corporate side. It's a little hard to
That's what I was thinking.
Yeah,
It
to
seemed,
get in.
yeah,
But it's funny because when we started. I mean, we were like, well, LinkedIn is a place where you're going to market everything, right? But we're going to experiment with some other stuff. You
yeah,
know, Instagram, Facebook, and we found that Instagram and mostly Instagram is the place where you get the best kind of return on your
yeah.
on what you're putting out there. People are sitting there and they're scrolling. It's become the natural
Yeah,
way.
that's what I was thinking. Because LinkedIn, I don't see many like I'm never scrolling on LinkedIn. I'm never finding
Yeah.
myself being like, let me go on LinkedIn and check out
Yeah.
what's happening. Typically, it's like there's this notification of LinkedIn. Let me
Yeah.
just,
That's what it is. It's a notification, or you're gonna go on LinkedIn when you want to find out information about someone
exactly,
or what they're up to or what they're
exactly.
doing. You'll rarely, and so we found it's a bit of a trial and error,
Yeah.
and so we found that Instagram is a great place to promote properties today,
All right.
and of any size, because
Everybody's on there.
Yep.
So
Yeah.
and I was thinking because I've seen other developers, let's say, build on spec, and they're just like confident, like with their building. Do you have those types of clients, and how do you approach this when it's not even built yet?
Yeah, we do. We do have those types of clients, and we do have a building. We have a building that was built on spec.
Can you define what's on spec?
Yeah.
What on specs means first?
Yeah.
'Cause,
Yeah, sure. So building on spec means that the developer will put up a building
Mhm.
before he has a tenant or before he has an occupant for that building, which is risky because you're putting up the money to build,
and
but
that's lots of money for the big industrial building I've seen.
yeah, and it creates a huge risk for the landlord. When the market went through the COVID phase
Yeah.
in 2021 and 2022, the vacancy rate for industrial space dropped to under 1%. And when the vacancy rate dropped to under 1%, there was just no space on the market.
Yeah.
Companies were going crazy for space. It became the risk of building on spec came down substantially.
Yeah.
And so everybody was kind of rushing into it and building.
So we're still talking about Montreal market, or
Montreal
was it
market.
even like
Well,
wider?
It
Canada,
was
cities?
global.
Yeah.
It was everywhere because there was just, it was COVID kind of accelerated a lot of things.
Yeah.
And one of the main things that it accelerated was our use of e-commerce.
Yes.
Anybody who wasn't in it was forced into it, that no matter the age.
Yeah, that's true.
And so then this dynamic changed where everything was coming out of warehouses.
That's true. I remember that.
And so because everything was coming out of warehouses, there was this boom in warehousing. Montreal typically was a manufacturing market.
Mm-hmm.
And so it always had like a lot of clothing manufacturing that was done here in the past. So the buildings were built for that type of manufacturing. Low ceilings, lots of power, not efficient for distribution.
Yeah.
Then you had the Amazons who came in, put up 2 million square feet of space, these massive buildings, automated, high ceilings, right?
Yeah.
And so then and that's what the market needed, because
Yeah.
it needed distribution centers for all of this, all of this online and demand for online, and everybody expects to get everything today. And it wasn't just Amazon, on Walmart, on Best Buy, on any one of these sites, everything is available, and with pretty fast delivery.
I'm still shocked at how fast you can get some things. You just order something on Amazon, the next day you're like, it's there.
Yeah.
And now, last time I was ordering something, it was not in Canada, not stored in Canada. It took me like a week, and I was like, oh my God, a week is long.
Yeah.
When back 10 years ago, it'd be like, a week, that's crazy.
Yeah.
No.
And all of that is thanks to warehouses. And then it's kind of divided into these distribution centers that are a little larger, and then these fulfillment centers, which is also in warehousing, where it's like more localized in different areas where they can get that last mile. So they can get it to the client from that warehouse. So larger distribution centers that feed into these last mile distribution centers, that then get it to the consumer. So a lot has changed in in our economy.
Yeah.
And then COVID just forced everyone to have to buy everything online because no one was able to leave their house. And so now once you're used to it, you kind of don't move away from it anymore.
I find it very, even sometimes just going shopping for something, I'm like, I might as well just order it online, because it's like there,
Yeah.
you don't lose time commuting to the thing, finding the thing, and then paying, and then anyways, but you get the point.
Yeah.
Well, I had another question. Let's say, what kind of mistakes do you see typically tenants that are looking for a space? You're like, let's say you're 40%
Yeah.
of your clients. What kind of mistakes do you see them making in terms of, do they come to you too late, or do they, like, what happening?
There's all kinds of things that happen in this business. There's all kinds of mistakes, and it's important to have someone who's in the market, who understands the terms and conditions that are customary on the market,
Mm-hmm.
and what kind of terms and conditions you can go and get. And it's funny that you mentioned that. So when we're talking about mistakes, because something did happen to me recently with a client.
Yeah.
And it was an old client that I dealt with for a long time, sold a company, and essentially they were trying to renegotiate an expansion of their lease with their landlord. And after they had many discussions with the landlord for a while, then they came back and said, they kind of said, oh, this is what's going on. And they were kind of trying to work a deal in the back. And the landlord told them, well, it's going to be cheaper if you work with me on this whole thing. And so then I said, okay, guys, well, what's the deal? What are the terms? What's he offering you? Right. And so they give me the terms, and we go through the terms. And I said, well, I negotiated this lease for you guys, 5 years ago. I know what's in that lease, and the option to expand into that space is at a fixed price, and it's in the deal already, and it's half the rent of what he's trying to get you for right now. Right. And so this is kind of
because he couldn't have expected 5 years ago that COVID would have happened.
Exactly.
And increased
right. And so then this gives like a bit of a of a sense of what it is. And I have like a method, I would say it's very methodical every time I'm looking at it. Okay, this is what's coming up. Okay, we have a right to expand into this space. Okay, what does the lease say?
Yeah.
Right. Go back to my notes, and I always extract everything out of the leases. I have it in my notes for every file.
Yeah. Okay.
Right. And so I'm reading my notes. Okay, well, we have the option, and it's at this price.
Yeah.
So,
okay.
Right. And so now they're like, oh my God, we're glad we came to you, because
how much money must you have saved them over, like,
oh, you're talking about hundreds of thousands of dollars a year.
Yeah.
Right. So, but this is just an example of, of these type of things that end up happening. And I could say over and over and over again, even when I'm representing landlords or vendors on the side of buildings for sale. We had an industrial building for sale. Well, I'm able to sell it to this guy at this price.
Yeah.
And very few times did I see a scenario where going to the market and creating a competitive environment for selling an asset or leasing an asset didn't generate a better deal.
Okay.
Right.
Okay.
And that's kind of what it is when you're in competition.
Yes.
You're forced to pay the top price, or
Yeah.
you're forced to pay the right. And again, it depends on this different scenario that you're in. Right. And when a good space comes on the market, if there's going to be competition, then as a tenant, you do need to pay.
Yeah.
So your tenant does need to be advised, hey, you're going to have to pay to make this work. Right. At the same time, and then at the same time, we're also dealing with all these different characters. So these are all these little ideas that are popping in my head now, but it's also the same idea. I come to another broker who has a property for rent, or a landlord directly, right? And my tenant wants to rent that space, or okay, what's going on? You're not getting the answer. Hey, what's going on? Do you have another offer? What's the deal? And so you also need to be able to advise. Sometimes you're advising your client, hey, I think we can negotiate a little bit further. Or sometimes you're telling your client, you need this space, so let's not screw around. Give them a little more, and let's get this deal done.
Yeah.
Right. And so these are the intricacies. 18 years of experience in the business.
That's what I was going to say.
Yeah. You start to get an intuition for when something is off, or when things are not working well, or I'm sorry, you're giving me this whole story. No. I want to speak to your banker. I want to know what the real story is. If I don't get your banker on the phone, I don't believe you. Right. And then we can work through the deals, because bringing the clients together isn't always the part of the deal that's the most important. It's actually getting the deal to the finish line.
Yeah, that's
right?
true.
Getting the lease signed, getting the building sold, those pieces. So, and that's kind of where there's the difference between the real professionals are and the ones who
Mhm.
have the experience and the ones who are just trying to, move around and peddle deals.
Yeah, because I guess with now 18 years, you have systems and you understand what's going on, and you get, as you said, like the intuition of when someone is screwing around or not, or
Mhm.
like if you have to move fast, because maybe you need to tell your client, yeah, that's the best it's gonna be. Probably should go with that because you need the space, you need to move quickly. It might cost you even more if you don't move quickly and sign that one because you have to look for another place.
Yeah, exactly. Yeah.
Yeah. Okay.
Yeah.
And then you were saying, because we were saying in 2020 the vacancies were extremely low, and now I've seen that some people are saying 5%. There's like a disagreement between what the
Yeah.
vacancies are. So
So,
what?
so it's that's also extremely interesting because we went through this, and so I'm going to touch on a few things that we already discussed,
Yeah.
like building on spec and stuff like that, because it'll all tie together. But we experienced a market. The market at the time when I came into it in 2008, at the very beginning, the vacancy rates were as high as 10 or 11%. Because it was like the American subprime mortgage.
Yeah.
American companies were saying if we're going to close down and save money, we're going to do it in Canada, and they were cutting back, and all these warehouses were becoming empty, right?
Yeah.
So I saw a 10-11% vacancy rate, and then I saw that over a 10-year period start coming down,
Yeah.
and so I experienced that, and then during COVID, it was just like historically Montreal never had a vacancy rate that was under 1%. That just never happened in industrial ever.
Mhm.
Right. So then it created this environment where now we haven't been building for years. Now we have to build.
Yeah.
Right. And so then,
Okay, I
so then
understand.
that created that environment, but it was all, I don't want to say artificial, but it was a little bit artificial in the sense
Yeah.
that, the average rental rate before COVID was somewhere around $5 to $6 a square foot.
Mm-hmm.
Right. And then it just kept going up and going up and going up and going up as demand came up, to the point where there are some deals that I remember doing very close to $20 net a square foot. Right. So you're talking about in the span of like 3 years, the rental rates almost quadrupling, and across the board going up by about 2.5 to 3.5%. Right. Which is a huge shock, right? Which is a huge shock to the market, and so as those rental rates came up,
Yeah.
because there was demand for it, companies were forced to take tough decisions. If you were a company operating here, you were renting space at $5, your renewal comes around and now you need to pay $15. Your rent is 3 times as much. Now you start saying, do I really need all the space? Can I be more efficient? Should I be implementing racking systems that are going to cut back my space? Right. And are there different things that I can do within my operation?
Yeah.
Well, do I need to have all these closed offices? Can I cut down my footprint? Right. And so it forced companies to think about efficiency more than anything else. Right. And so we saw that change. But then as all of these leases are starting to come up for expiry, and time is passing, and now interest rates went from being at record lows to skyrocketing upwards, and then war in Ukraine, and then all of these other geopolitical things that are happening.
Yeah, that's true.
And then Trump starts putting tariffs in.
That's
right.
true.
All these things start kicking in. So now all of a sudden it's
also unstable everywhere.
It's also unstable everywhere. And now the vacancy rate is coming back up.
Okay, so that makes more sense.
Right. And so now we're in an environment where, and it's interesting because we were, I would say in the last 2 years, 2 to 2.5 years, rental rates have slowly started to come down from their high. And we've probably seen them pull back about $2 to $3 a square foot over the last 2 years.
So we're looking at what, $15, $16?
Yeah, you're talking about an average of around $15
a
square foot. $14 to $15 a square foot, again, depending on class, but also.
Well, could you actually explain what different type of classes of buildings?
So that's interesting too, and then I'll get into the market and vacancy rates on that too. Is that so? Yeah, you have Class A, Class B, Class C buildings. Obviously, the newer stock has higher ceilings, is more efficient, has wider column spans. And that's what everybody wants. right? Then you have
Because
these
you were
kind
saying
of
warehousing.
yeah, for
Okay.
warehousing, but even for manufacturing.
Okay.
You know, you want the least amount of columns.
Yeah.
You want the highest possible ceilings.
Yeah.
Right. And in terms of efficiency of your layout for what you want to do.
Yeah.
So you're gonna put racking in, you can't have a column in the middle of the alley.
Yeah.
Right.
That
So
makes sense. That makes
yeah,
sense.
so you want to work with the least amount of columns. And so, you know, but so you have these Class A buildings, which
Yeah.
Montreal didn't have a tremendous amount. And then it kind of moves down from there. The lower the ceilings, the less
But
desirable.
what are we looking at in terms of height?
Mhm.
Let's say in a Class A building, or maybe I've even seen you were talking about that on your Instagram, like the concrete pads or everything, or instead of asphalt. Like, what's the difference between like a Class A, Class B, like that I could actually understand
Yeah.
numbers wise?
Yeah, so there isn't an exact science to what's considered Class A, B, or
Mm-hmm.
C, but essentially a new building that's built today, no one's going to build it with ceilings that are less than 28 feet.
Okay.
And most of them are 32. And then we're seeing the top of it usually is around 40 to 42 feet clear.
Okay.
You know, depending on what the solution that you have there is.
Yeah.
And then the I would say the stock of buildings that was built primarily between the late 90s and I would say, let's say 2015.
Mm-hmm.
You know, you're talking about buildings between 22 and 28 feet clear in
Mm-hmm.
that range. And then anything under 18 feet today is almost
Unusable.
not unusable, but yeah, I wouldn't say unusable, but it takes a specific type of tenant, right?
Okay.
For that type of space. And then touching on vacancy rates for the market, because that ties into it. What's very interesting is the vacancy rate has come up today from the low that it was during COVID,
Yeah.
but primarily in the class of assets that have those lower ceilings, that are older built buildings,
Yes.
right, and that are less desirable.
Mm-hmm. So the Class A stays relatively safe compared.
Yeah, the class A space in the current market, we call it like flight to quality, and there's this flight to
Mm-hmm.
quality.
Mm-hmm.
And then when you're talking about the larger companies, they also are extremely conscious of their what's our impact on the environment.
Yeah, so ESG scores and stuff like that. If I
Yeah,
understand
and so they're
correctly.
looking for buildings that are LEED certified,
Yeah.
that have like a BOMA Best, or that are carbon net zero, or
Mm-hmm.
that have those type of efficiencies, because they want that stamp and they want to be associated with that.
Because
Right.
it helps with financing and all of that.
Well, yeah. So so that's interesting as well. From the perspective of the companies, let's say a
Mhm.
company's renting, it's more about their image,
Yeah.
and they want to be associated with clean.
Being clean.
Yeah, and being clean. And then from the landlord's perspective, how do you motivate a landlord to build a building, or a developer to build a building that has these features when it costs so much more to build them?
That's
Right?
true. That's true.
So, okay, the tenant will pay more rent. That's one piece to it, but it's still very expensive to do it. And you need
Mhm.
to follow certain protocols, and
Yeah.
you need to use certain materials, and
Yeah.
it's not an easy process. And so, yeah, they'll implement in different types of incentives. So, a building that we have for rent right now, on Côte de Liesse, I
Yes.
mentioned it. It's a carbon net zero building.
Mm-hmm.
And because they built it carbon net zero, it benefits from the city of Montreal's tax credit, called le Programme des Bâtiments Durables.
Okay.
And then that program essentially crystallizes the taxes on the land for
Yeah.
5 years,
Okay.
and you're not taxed on the new building.
So that makes it affordable for the developer to actually do
So
it that
yeah,
way.
or he's going to be able to go get more rent because the taxes are so low.
Yeah. Okay.
So the operating cost for a tenant now just came down. In this scenario, the operating cost came down by about $1 million a year. Right. And so
Okay.
you're incentivized to build it.
Yeah. Yeah.
Because now you have that credit for 5 years. It's like a credit that's worth almost $5 million.
Okay.
Right.
Okay,
And so, right. And then there's other pieces to it as well. Then the bank will tell you, well, if you're going to build a building and it's going to be LEED certified silver or more.
Yeah.
All right. So either that certification or higher.
Yeah.
Well, we'll grant you 30-year amortizations instead of 25-year amortizations. Right.
Okay.
And so now you're all of a sudden,
so your payments are much lower then.
your payments are lower, so you have access to more capital. when you're borrowing. And then certain other banks like sometimes the BDC, the business development bank, that are more there to promote or to get companies to grow. They'll say, okay, well, if you have certain kinds of certification, LEED Gold, LEED Silver, whatever that certification is, we have a discount on the rate of 1%. Right. And so those are also pieces that'll play into it. So there's all these little intricacies in the market.
Okay. That makes sense. And well, do you actually have, that just came to me, because we're talking about financing, do you actually have clients that come to you and that business owners, they're growing, but they don't want to be tenants anymore. They want to build their own buildings. Does that happen a lot? Or?
Yes. Yeah, it does happen a lot. Yeah.
So if the process is the same, do you find land for them, or how does it come? What's the process of that?
Yeah, look, it's not often that we sell land. We do deal in industrial land, and it does happen. It's not often, because often when a company is making a decision to expand, they don't want to have to wait 18 to 24 months for their expansion. That's true. Right? So sometimes it'll be like but sometimes they'll come to us and say, well, we need a solution for the next 2 years because we have to build, because what we want is specialized.
Yeah.
Where I see it a lot is more where it's specialized.
Okay.
And I would say our team has a specialty in dealing with food buildings. So all kinds of different types of food buildings, cold storage, and those type of facilities.
Yeah.
And when it comes to those types of businesses, everything is really specific. Every operation is different.
Mm-hmm.
There's a flow that needs to run with this operation. There's a lot of equipment that needs to be installed.
Yes. Okay.
And because of that, sometimes it's cheaper to build than to take an existing building and to retrofit
adapt it.
Yeah.
Okay. Yeah. Okay. That makes sense.
Because, like, for example, in a freezer,
in
a freezer, you have this exchange of temperature,
mm-hmm.
and the slab can't go below a certain temperature.
Yeah.
Right. So you're going to take an existing building. You need to break the slab. You need to run glycol lines underneath, insulate, pour a new slab, right? It's almost cheaper to just build a new building. Right?
Yeah, that's true.
You need to put up the panels anyways. You need to bring in the evaporators anyways. You need to do all this stuff. So what are you saving? Just the structure?
Yeah. But I guess, do people actually do that because maybe it might save them time on the permitting and getting the things ready right away? Or this permit, is it long, very long as well? Or how does that work?
Well, people, you're talking about building, or you're talking about
let's say you have, if you're retrofitting, then maybe you have less of a headache with permitting.
So you only see the retrofitting of building this type of infrastructure into space when it's smaller scale, right?
So like 20 or 15,000
Yeah,
square
even
foot.
less. I would say like 5 to 10,000 square feet. If you're going to build like a 5 to 10,000 square foot freezer within a space, okay, you can do it. And you can also get away with certain solutions that won't require you to use glycol.
Okay.
For example, like
so it's
maybe
simpler.
Yeah, with like electric meshing and stuff where you're not going to have to run glycol lines. Mm-hmm. You know, so that's where we see it. But then once you start getting bigger than that, it's just more efficient to just start over.
Okay.
Right. And have something new.
But typically the ones that come to you for like an expansion and like actually building the building,
mm-hmm.
how do they just still keep their old building in the meantime and then just transit until the new building is ready to be?
Typically, yes. Yeah. Typically they're going to keep their building. They're going to put a plan in place.
Yeah.
We're going to sell them land. And then they're going to, we're going to find them industrial land.
Yeah.
And then it's a bit of a different process because we're going through zoning, looking at what the requirements are, what the ratios, what they're able to build on the land,
mm-hmm.
And those type of details. And then for them, it's 2 years down the road, right?
Yeah.
And they need to think 2 years down the road, right? And so, it does happen from time to time. I would say in today's market, we're seeing less and less land deals because a lot got built on spec during COVID.
Mm-hmm. Yeah,
and because all that stock got built during COVID on spec.
You drive around, you see like building popping up everywhere.
And there's no land. There's not really any land left. And
mm-hmm.
the price for land came up substantially.
Mm-hmm.
And then so we're not seeing a lot of it because the price is too high and there isn't a lot of land left. We saw a lot of big projects come up.
Yeah, I've seen that. I keep seeing like new building. You drive around. It's like, as you said, 32, 40 feet high. And then you're like, whoa, what's happening here? And actually, I was also thinking, let's go back into the shoes of the business owner. Could you explain to us the process, even from the start when they go to you to find a space, to this process there when they're ready to operate? So let's say they find a space, they decide, what they want, define the space, and now they have to do some work, some construction. Like, what I want from you is the process and the actors that will be involved in that process, the people they will need. And even if you could even make those introductions to help them get ready, basically.
Yeah. So I would say we work with a lot of professionals because along the way, there's so many things that can go wrong. It's like a whole, it's a whole process. So it's, the beginning phase is identifying needs.
Yes.
Right. In the middle phase, it's once we've identified what the needs are, now it's finding a space that fits the needs. Right. And so now we're going to market, we're finding space, we're narrowing it down, right? Now, once we've identified what are the potential spaces and the potential options that we have on the market, now it moves to a bit of a different phase, because now we're moving to a phase of, okay, so it's feasible. We have an idea of where it's going to go, but now we need to negotiate a deal on the space.
Yeah.
Right. And so then now we're negotiating a deal. Once we come to terms on a deal on this space, now we move to a phase where, well, there's a certain amount of due diligence that needs to be done. Now that we've identified this is the space, we need to ensure that this is the right space in deep detail, hiring all of the professionals now at this point.
So what do you mean by professionals? Who are they?
Yeah. So if we're talking about, so there's two paths, right? There's a path of you're going to buy a building, or there's a path you're going to lease a building. Okay. Right. And so if you're leasing a building, it's more of space planning, architects, figuring out the exact intricacies of what you need within your space. If you're buying a building, well, you need to have it inspected. So you have people coming in to inspect the building. You need to have it financed. So you need bankers who come in and who can run the financing for you and who can ensure that all of those things run in place. You also you're going to need certain types of professionals for environment, because that's become a big piece today. Transactions take longer today because there's all these different requirements, different government requirements, like banking
phase
requirements.
1, phase 2,
phase 1, phase 2 environmental testing, property condition assessments, and the banks are becoming stricter with what they're looking for and what they want you to do, and the type of testing that they want you to have prior to right.
Is it typically institutional bankers, or is it, because I had a podcast episode with a commercial mortgage broker, and we had different classes of lenders. Is it like typically class A lenders that would just handle those deals, or do you have other types of lenders even in the industrial market?
Yeah, I would say, in our practice and in what we do and my team does is we're mostly dealing with user sales. We're not dealing with investments, right? So even when we're representing landlords, we're bringing users into their buildings. So we're in people who are going to use industrial space. So that's generally the type of companies that we're dealing with. So if they're buying, they're typically coming with their bankers that they have right off the bat.
So they already have their relationship and they already have their money.
Who we see come into these transactions often is the BDC or Investissement Quebec, or when it comes to food, it's the FCC. And so it's these different types of banks that are more specialized in these type of deals for companies that are operating.
Okay.
Because the government wants to stimulate these type of like the BDC is the Business Development Bank of Canada. Yeah. And they have a mandate to help companies grow. So they are able to do certain things that a conventional bank is not able to do. And so if a company has strong financial statements, sometimes they'll be able to finance them up to 100% of the acquisition. Okay.
Because of their business that's going well.
Yeah, because their business that's going well, because they have strong financial statements, because, and because buying this building will help this company grow in some sort of, way or capacity, or right. And so, so those are kind of typically the banks that we end up seeing on these type of transactions. I don't see a lot of mortgage brokers. When mortgage brokers get involved, it's because the files are complicated. Yeah. And they require someone who can really put the file together properly and build a proper file so that they can make it attractive. I rarely see any B lenders.
Yeah, that's what I was wondering. I was thinking that wouldn't make much sense in my head.
Yeah, we rarely see them. From time to time, you'll see like when someone needs to or wants to close quickly,
Yeah.
they may take some temporary money
Yeah.
to get a
Like
to
a
get
bridge, and then
a
they
bridge,
just
and then so which might be from some of those B
well.
lenders.
What happens also when they, let's say, they lease or even they buy a new, they still need to do some construction to adapt it. So
Yeah.
is there like a bridge lender there, or is it still financed through the bankers they come in with?
Yeah, it's usually financed through the deal when they come in,
Okay.
and that's another piece as well. Sometimes we're working deals, but there's a lot of work that needs to be done. Like
Yeah.
in the phase where we're identifying if the space is viable or not,
Mm-hmm.
there's always going to be all kinds of professionals that are coming in, and there's going to be a lot of construction work,
Yeah.
right? There may be a lot of construction work, and that's where we'll have contractors come in, or we'll have other trades come in to look at the space and say, okay, well, right, we want to run this project to make this building work for me. This is what needs to be done. What's it going to cost me to get this done? Right. And that's part of that due diligence phase as well. Right.
Okay.
And so I need to get all this work done. I need to build out the offices. This is the layout that I need. This is how much it's going to cost me. Does it make sense? Should I proceed or not? Or do I need to come up with another creative? It's going to be too expensive. This doesn't work.
Okay.
What else can I do?
Okay, I understand.
Right. How can I
Okay,
cut
that makes
back?
sense.
Yeah.
But going back to the process, you said for phase one, determine the need, like beginning. Middle phase is, could you remind us to the middle phase and then what we go through from there?
Yeah. So after, so once we determine what the client's needs are, and that's probably the most important phase.
Yeah.
Because if you understand exactly what they want, you can find them the right space and you can avoid issues afterwards.
Yeah.
So then now that we've identified the needs, we know exactly what they need: clear height, electrical entry, loading docks, drive-in doors, whatever type of, what they need. We move to finding space. And now finding space, which is the next phase, is I need to ensure that I'm covering the whole market. I need to ensure that I didn't miss any space. And I need to ensure that I'm putting all the available options out there so that I can narrow it down to the best possible space for this tenant or for this company at this time. And the best possible space is what's closest to what they need operationally, right? And from a price perspective, right? So that
I'm pretty sure you can also advise them on what might work for their business. With 18 years of experience, you've seen many deals. So you're like, are you sure that's actually what you need? Or so you also come in, I imagine, as an advisor to them.
Yeah. So that would be go back in the identifying the needs phase, right? Like I said before, what do you need that clear height for? I always ask questions. Oh, I need this, 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 and this. Okay. What do you need it for? Right. Okay. Well, I have this many machineries that are running on this. Okay. But are they all running at the same time? Right. Are you running on 220? Could you be running on 600 volts? That it's going to need less amperage. Right. And then and so these are like different, these are different. Well, we need machinery. We need this much amperage. Have you spoken to your electrician about it to ensure that's what you really need?
Okay.
Or is there another way to run it? Right. Because every time you're asking for something that's not standard or that's more than what you have somewhere.
Yeah.
There's dollar signs, right? And those keep adding up as well, right?
True.
So you want to kind of claw back. Okay, well, you need a space that has all these features in it, but it costs money. Do you actually really need these features?
Yes. Okay.
Or not? And sometimes it's a matter of saying, okay, well, I don't want to sign for more than a certain amount of time, or we're preparing a plan for a certain amount of time, or I have 4 warehouses in this market. Okay, well, is it more efficient for you to have them all in one location? Why do you need to break it all up? Is it better for your employees to be in one location? Okay, well, then when we're negotiating this lease, let's negotiate it so it finishes at the same time as your next one, so we can, when those expire in 3 years and 4 months from now, we can merge them together into one location and make you more efficient. Right.
Okay.
So that might be some of the advising that we might for larger tenants that might have more space. Okay. So the needs identification time is
the
where
biggest
it's the biggest time where we can really understand the company and what they're looking for and understand, okay, what's the plan, or what's the game plan for finding you space?
I mean, and at this point, I guess you already have an idea in your mind once it's getting to the end of that, where,
Mhm.
okay, this is actually a space that might work because you know the market already after being in there for so long, I guess.
Yeah, and you also know the players, and you know the
Yeah, that's true.
landlords, and you know the right. And so, okay, so you need the space. You're telling me you're not going to expand for another 5 years, right? But this is your landlord, and this is what he's going to be like at the renewal time, at the
Mm-hmm.
renewal period. So why don't we, as a safety measure, negotiate this extra option in and put in the right language to protect you so that you don't end up
Oh,
in a
just like you did
situation.
early on with the.
Yeah, same idea.
Yeah.
Exactly. And that's funny because with them, they're like, oh, we don't need more space than what we had right now. Right.
Mm-hmm.
Well, they had a building, and I've been dealing with that company for maybe 10 years, 10, 12 years, something like that. I brought them into that building at the very beginning. And when they came into the building, I said, you're going to need the whole building. And
Yeah.
they said, no. We don't need the whole building. We don't need more than half of it right now. And then we just kept adding.
And they needed the whole building.
And they ended up with the whole building in the end. But it took 8 years,
Yeah.
right? It took 8 years till they, but it's part of, it's part of, I see these companies coming to see me. Okay, well, I need space. I need 5,000 feet. Okay, he's going to be calling me for 15 in 6 months,
Yeah.
right? Because I see his business. I know where it's going,
Yeah.
right? And so I need to negotiate a way to get out of this lease, or we need to figure out a mechanism to have.
So it's not just the needs now, it's that you also try to figure out the needs 10, 12,
Yeah.
15 months from now, so that you can negotiate a proper lease that won't get them stuck
Yep.
when they need to make moves in 12 months from now.
Yeah, because once you're committed, right? And most landlords don't like to sign leases for under 5 years.
Yeah, that's true. Yeah.
Right? So once you're committed, and you kind of stuck. So if you need an expansion, you have to have the ability, and like in that case, it was, well, I want a right on all of the addition. When the minute a space next to us becomes
First
available,
refusal.
you got to offer it to me.
Yeah.
You got to offer it to me, and I have to have the ability to take it, right?
Mm-hmm.
And so in those type of scenarios, sometimes you need that. Sometimes you need the ability to say, well, we know we only have this contract for a certain amount of time, right?
Yeah.
Well, we need to have the ability to give the space back.
In case, like, once it's done. And
Let's say my contract finishes in 5 years and I'm not going to renew that contract, and I'm
Yeah.
only going to need half the space. I don't want to be tied down.
Yeah, I
Right.
understand.
So sometimes that's rare. That doesn't happen often, but these are.
But yeah, you got to look out for it, and that's what
you
you're
got to
here
look
for.
out for it. Exactly. You got to
Okay.
look out for it as well.
Okay, so basically you look at all the intricacies of the deal and trying to understand, okay, what are the needs now and what are the potential needs in the future, so that you ensure that your clients get the best lease possible in
Mhm.
case they're leasing. Let's say get the best lease possible, so they're not stuck if they're trying to make another move in the next few years.
Yeah, exactly. And especially with a lease, because when you own a building, okay, I need something bigger. You're not tied down to anything other than the time it's going to take you to sell the building.
Yeah.
Right. But if you decide, I'm vacating this building, I want to sell it, I want to put it on the market, you're out. Right. But when you're leasing, you're committed. Right. And you can't get out of that. You can't get out of that lease. Right. And if you need more space and it's not with the same landlord.
Yeah.
Well, he's not going to let you out of the lease. Right.
Yeah.
So that's another piece. So as you say, well, I'm not sure what my expansion is going to be in 10 years from now or in 5 years from now, and I might need an expansion, and I'm signing a 10-year lease, but I need the security of 10 years. Well, then we better choose a landlord who we know has a lot of space.
So that way.
So that if there is an expansion in the future, I know that I can, as long as I'm within his portfolio, he's going to let me
he
expand.
doesn't mind as much because it's the same portfolio. He's still my client, pretty much.
And he's going to prefer to have somebody taking bigger space because he's getting rid of space. That's right. He's going to have a larger space available. He wants to rent it out.
Yeah.
Right. And so he's obviously going to let us out of this lease as long as we rent with him. Right.
Yeah. And bigger.
Bigger. Exactly.
Yeah,
so these are little things people don't think about. Oh, well, I'm just going to find a space, right? I'm just going to rent it. Okay. But what are you doing in your business? Where's your business going?
Do you have like examples? We don't have to go into specifics, but that you've seen where people were just jumping into deals, and if they had gone through like a due diligence process early on and understanding their needs and their future, that would have saved them these issues, actually.
Yeah. So I would say it does happen. It does happen. If it happens fairly often, I wouldn't say it's like widespread.
Yeah.
But it happens often. And I think it's more, what differentiates the better brokers on the market and the ones who are, is the ones who know how to ask the right questions, right?
Mm-hmm.
And to identify those needs properly. And then to say, okay, well, this is what you need,
Mm-hmm.
right? At the beginning, you're asking a lot of questions.
Yeah.
And you want your client to talk a lot and to give you a lot of information.
So what types of questions could we go back again on the types of question you would ask?
Yeah.
Let's get a specific type of client. Let's say
Yeah.
it's either you specialize in food.
Yeah.
So what kind of questions we would ask?
Yeah. So if somebody's coming to see me for food,
Yeah.
and they're in food production, let's say, for example. So like the first questions that I want to know is, how much square feet do you need and why?
Mm-hmm.
And then I want that explain to me what your operation is. What are you doing? Right? Do you have long assembly lines? Do you have short assembly lines? Are you cooking? Are you freezing? Are you, is everything at an ambient temperature? Is there a lot of water involved in the operation, right? And so all these questions, I'm not asking them for fun. These are, I want to know, do they need floor drains? Does this production area need to be refrigerated? If they're long assembly lines, I need to find the configuration of space that's long and less square,
Okay.
right? So that they can have the right types of, of assembly lines, right? Are you freezing the product at the end? Is your product going to be delivered to 3PLs, or do you want to store it internally in your warehouse? So do we need to foresee that we need to build a larger storage warehouse in your space, right? Does your equipment run on gas or on electricity when you're cooking? Do I need to be ready for a certain type of electric entry? And then how do you deliver your goods? Is it mostly 53-foot trucks that are coming? Do you have a large loads of stuff going in and out? So what type of loading docks do you need and systems do you need? And then what's your office requirement? Are you getting certification? Is there different certification? Are you going to be CFIA, HACCP, SQF, all these different certifications? So are you going to be exporting to the US, or are you going to be exporting across Canada, or are you going to be distributing only in Quebec? Because the norms for each one of these types of certifications are different and require different the space to be built out a little bit differently and to have different workflows and
I
right?
understand.
And so I'm trying to understand, what exactly is their operation, because to find a space that matches this, I have to match it to something that's on the market. Right. And I have to find the space that matches it. So I'm asking all these questions, and it's like, somebody tells the typical problem. I make cookies and I want to move into a plant. Okay, I'll find you a place that's 5,000 square feet. Right. And then they're going to go and they're going to look and then, oh wait, there's no drains and there's this and there isn't that. And I'm asking those questions right off the bat. I want to know right off the bat. So
you don't lose all the time looking for something that's obviously wrong in the first place. Had you asked this question, you would have known pretty much.
And it's funny, when the young brokers get in, and so our team. So on our team, we're 5 brokers now on the team. It's myself and Gabrielle. We're senior, and then I have some other brokers who work with us. When they were younger and we were training them, I always said you could be super busy in this business all the time, and you can work 80 hours a week and make no money
because you'll be looking for spaces.
And you're spinning your tires and you're with the wrong people and you're not asking the right questions and you're, and so that's just the nature of the way it is. You need to ask the right questions. You need to get the right information, and you need to make sure that you truly understand exactly what your client is looking for.
Okay. Yeah. So that's the beginning phase that we went back to. Then the middle phase, what is it? Yeah. Once that food client came in, what's the middle phase like today?
Now I need to find out, does this space exist on the market? What they're looking for, exactly the way they want it, does it exist on the market? Or if it doesn't exist, what's the closest I can get to it?
Okay.
Right? And then as I'm going through identifying the spaces, looking for what's out there on the market, speaking with different landlords, getting an understanding from them. Do they have the space? Is it coming available? Are they willing to build it? Do they have a space that's raw and empty and they're willing to put in the money and the investment to build it out for them in food? And we're putting together a list of options for our clients.
Okay.
And then I'm coming and presenting them, look, these are the 10 options that are available for you on the market. we've sorted them from what we think are the best to what we think are the worst options that are available to you, and we need you to narrow it down. Tell us which ones do you want to go visit, and which ones do you want to go see, which ones do you want to, right? And from there we'll take that list and we'll shorten it down and we'll get a short list.
Okay.
Now I got a short list of options. Let's say we've got it narrowed down to 3 different options, right? Now we can do a deeper dive into those 3 options and see, okay, as we start implementing different things into these buildings, does it really work for us or not? Right? And that's where they at this phase they may start bringing in some professionals.
Yeah, that's what I was going to ask. So maybe an architect, or is there also like, especially in food, there's probably different professionals that, because let's say in commercial, it's typically an architect and interior designers and some engineers, mechanical, structural. In industrial, I imagine, since there's a lot of specialty equipment, you have different professionals most likely.
Yeah, we have, we have all kinds of professionals. I would say in industrial, well, in food is separate from industrial. I like to say they're 2 separate things, because in food, it's really specific, because there needs to be a workflow. There can't be cross-contamination. There's very strict guidelines and requirements. So that requires specific companies that know how to build these flows for you.
Yeah.
Right. And so there's architects and designers who specialize just in that. Right.
Okay.
And then they'll put together the plans for the flow of space and, and how this stuff works. In industrial, it's typically just designers. And most of the designing phase, if it's manufacturing, there may be some design phases in the warehouse. But most of the designing is happening in the offices, right? And just figuring out the right layout. To get the right amount of employees in. And typically they want to have the least amount of office.
Yeah, that's what I was
right. They want to, how do I keep my office the
as
smallest
small as possible
while maximizing my warehouse? Right. Because that's where they're making money.
Yeah,
right?
That's true. It's true.
And so that's kind of like the phase. And when it gets into manufacturing, that's where it may get a little more intricate. Okay, well, we need to have water coming in, or we need to have a certain electric entry. We have these assembly lines that are very long. And we don't want them to make a lot of turns, because every time they turn, that's where things can go wrong, right? So these are just different, different pieces. And so as we're evaluating a building, well, it seems like the energy costs at this building are higher than the other one, or it seems like there's, some sort of restrictions, or with shipping, or my access for trucks is not as good.
Yeah, that's what I was going to ask for.
Or the delivery paths. Sometimes when we're dealing with an operation that's heavy on employees, okay, well, I need to move, but I want the smallest impact on my employees. Well,
yeah.
Okay.
So that they don't have to drive 50 minutes or an hour.
Do you have the postal codes of all your employees? We're going to run it into one of our softwares, and we're going to, for your employees, this is the best location because it's going to be the least disruption to them.
So it could almost be, if it's employee heavy, it could almost be that you start with that. So that way you have a area where you look and you're like,
sometimes, yeah, depending on the type of employees. If you have very skilled employees, that you can't afford to lose, and that you need to, right, you that might be where you're gonna say, I want to stay within a certain area, right?
Okay, that makes sense.
Or I mostly service this one very large company, so I have to be close to them.
Can't understand. That makes
right
sense.
So I can't be more than this radius. Or interestingly enough, a few years back, I was dealing with one of the probably the largest distributor of flowers in Quebec. Right. And so all of the florists and all of their shops, he said, look, wherever I go, he said, the guys who buy flowers, there's a route that they take. We're the biggest, so everybody's going to kind of follow us, right? But there was kind of like this path where people are going to drive on the highway, where he wanted to set it up in the most efficient way, so that it would, so that you would have to hit him first on your way to all of the other places, right? So sometimes there's this, that it only happened once in my career in 18 years, but it's interesting, right? So there will be all these different things, but that was the challenge on that one deal. Okay, so what the location was important. So let's look at locations, and sometimes when you have that type of stuff that's really specific, I'll say, well, forget about what's on the market. Where's the ideal building? Or where's the ideal area? And let's just call the owners of all those buildings and see if there's some kind of deal we can make on those buildings, because this will be the ideal spot.
Yeah.
Right?
Okay. And then you just build a new building, or do you just
no, or we work with what's there, or we see if there's a way to get a deal done. And then in that case, they had a tenant in that space. It wasn't on the market, but they had a tenant in that space, and things were not going well with that tenant, and they wanted to get rid of that tenant.
Mm-hmm.
So we came in just at the right time where that tenant was in default. They were going through all kinds of problems and whatnot. So we were able to take over that space.
Okay, that makes sense. All right.
Yeah.
Well, so now we've done the beginning stages, understanding the why and what they need, their needs. Now we've gone through the process of getting a short list of spaces.
Yeah.
And then we have the professionals involved, mostly designers, because we want to minimize the office space and have a lot of warehouse space or and then what comes next? And then is it permitting? How does it work? Or do they also bring their own professionals for their lines and everything?
A lot of times they will, but yeah. So once we've identified spaces, we've shortlisted, and we usually was shortlisted to an A and a B option.
Yeah.
That's where it is. Sometimes they'll want to run a more detailed due diligence on both, but most of the time, this is my A option. I'm going to focus on it right now. We would start negotiating the deal at that point. Right?
Okay. So you go speak with all the landlords and...
Yeah, we'll speak with the landlord. We're going to start negotiating. We're trading paper. We're going back and forth, and we're trying to figure out the terms of what we need in the deal. And that's where it's another skill set that comes into play, right? So, we had the initial phase where you've got this skill set of you need to be able to be attentive, listen, ask the right questions, gather information. Right now we've got this thing where we're running around and hunting and looking for space.
Yeah.
Right.
Yeah.
Right. And now we're changing. Now we're moving into a negotiating mode.
Mm-hmm.
Now I need to negotiate the best terms and conditions. Right.
Okay.
If I'm representing the landlord, I'm representing the best terms for him, for his building, to add the most value to his building. Right. And if I'm representing the tenant, I want to get the best terms and conditions for
when
my
you say
tenant.
Value for his building, because industrial, the value of the building is related to the quality of the tenants, right?
Yeah. So if you're a landlord, your value of your building is in the rent that you're collecting. What is your net effective rent at the end of the day, your NOI?
Okay.
Right. So your net operating income on the building will be capitalized at whatever the market is paying, what kind of return the market is giving on it at any given time. And that'll determine the value of your building. It'll determine the type of financing as an investor that you can get on the building, that you could then pull out of the building at that point and redeploy into another project or into something else. Right.
Okay, I understand.
And so the landlord is always thinking, what's going to add the most value to my building? How do I get the best net rent? And what's going to add the most value? And what kind of investments will I make in the space? And to ensure that I have, the highest rent, the best quality tenant, right? And a term that's long enough that there's security, right?
Yeah.
A bank wants to lend when they see
10, 20
a
years.
solid company that has very strong financial statements. There's no risk that they're going to leave for a long time, right?
Yeah.
And that the rent is in line with what the market is and is not exaggerated or above what the market is. And if they leave, I'm going to be stuck with half the rent.
Because if their bank is coming in, they're coming in for 25, 30 years, typically, depending on the type of building, right?
Yeah. It'll typically be a term of 5 years.
Yeah.
But an amortization of 25 to 30 years.
Yeah, so they're stuck in there for 25 years, and then they have to renegotiate every 5 years, pretty much.
Yeah. So, so like that's the landlord side. And then from the tenant spot, it's like, well, it needs to be the best for my operation so that I can scale my operation up properly the way I need to and operate the way I need to.
Yeah.
And I want to keep my costs as low as I can.
Okay.
Right.
I understand.
And so is it upfront cost or is it operating costs or what is it that's gonna keep me, and so your motivation with the landlord is obviously to negotiate the best deal for him. And when you're representing the tenant, your motivation is as well, what's going to be the best for him operationally and financially, right, when negotiating this deal. Okay, so you have to understand the market.
Yeah, that makes sense. So, okay, we've gone through beginning. Then we've gone through the middle beginning when you understand the why, beginning when you find the short list A and B, and then you have your tenants visit, and then now you go into the negotiating mode. Initially, you're inquiring, and then you switch modes, negotiating to get the best conditions for your clients.
Yeah.
Then once that's done, they've signed the lease, and then you're out of the process, or are you still helping through the process?
Oh, we're still in the process. So we're still in the process because now we're negotiating the deal.
Yeah.
And so if we're negotiating a deal on a sale, there's this whole due diligence process that requires a lot of hands-on help. because there's just a lot of professionals and stuff that need to
Yeah.
come in, and there's different things that can happen, and there's financing, and there's all these other pieces.
So
to
tons
it,
of
right?
coordination.
Yeah. When it comes to the leasing phase, once we have the space leased, it doesn't necessarily end there, right? Because then there's the occupancy and the coordinating and making sure that they're able to take occupancy and that the landlord delivers on all the stuff that he says he's going to deliver on, right? And so there's that phase as well. Again, what differentiates the good brokers, from the ones who are not as good is that a broker says, "Okay, at least sign, I'm done, I'm out of here." Right.
Yeah.
Right.
Yeah.
No. This is not this is a process of ensuring that, now you're walking your client through it. And it's also a process of saying, okay, now I'm going to still continue to follow up with these guys every year, every 2 years, on certain intervals to ensure that the client doesn't have other needs, or things haven't changed, or there's things that may need to be,
like your client that needed, like, you told them you need the whole building, and eventually down the road. So
same thing.
You had that you added that condition into the lease pretty much.
And it's interesting because in the past with that specific client, I spoke to them regularly, and I still speak to them regularly. And then they sold the company to someone else, and they have other stuff, but then new people come in, and that's where it gets a little tricky sometimes, because you don't have the same relationship.
Yeah, so you have to start from new pretty much.
Yeah, you start fresh, and that's why they got into this scenario. This never would have happened if I was dealing with the old ones. They would have called me right away, right?
Okay,
you
understand? Yeah, okay, understand.
So, but and so then that's kind of where things say it is a relationship business. At the end of the day, it's a relationship business.
But then, okay, so before we wrap up, what does the process that we've just described from beginning to end, until you're still involved even after signing the lease or after due diligence when buying a property? How long does this process typically take? Is there like a rule of thumb, or do you have like seen patterns as you go through?
Yeah. So the first phase, which is identifying the needs, is not long, right? That's typically 1 or 2 meetings. And then we have that straightened out.
Yeah, because after 18 years, like, you understand.
Yeah, you understand it, and the needs are not going to change much. And then if there's a delay in that, it's because, we need to speak to certain professionals regarding what we want to do here, just to ensure that this is exactly what we want to do, right? And it's high level. Then finding the space can take time if the space doesn't exist, right? And so sometimes they'll come, we know the market well. We track the market regularly, and we're always kind of on the hunt for what's out there. Yeah. Right. And so that could sometimes take time. It could go quickly, but it's like dispatching the right people. Does somebody need to come in from out of town to see the space? Is it only going to be a local manager? Is it a company from, these type of things? So, but typically I would say that phase of visiting spaces and looking at spaces typically lasts somewhere between 3 weeks to 2 months. Okay. Right. And typically a tenant will come back 2 or 3 times to see the space, prior to making a deal. And then we're negotiating. There's 2 phases to the negotiation. Like first we're either negotiating just the terms. Yeah. So it's either a term sheet or an offer to lease or a letter of intent. Yeah. Right. And then once we've established the business terms, then we're negotiating the actual lease document. Okay. Right. And so negotiating a lease document always takes time. You got lawyers involved. Yeah. You've got lawyers on both sides. Everybody needs to put their opinion in. Everybody needs to get their stuff in. Right. And so you're involved in this type of, back and forth. Yeah. It can drag out up to 2 months. A lease negotiation can drag out up to 2 months.
As long as possible. Typically you said 1 to 2 meetings from the beginning. Yep. Then 2 months, we're looking at 2 months max, roughly.
Looking for space, yeah.
Yeah, and then another 2 months letting the lawyers deal with it.
Yeah, negotiating the deal, getting the deal done, and stuff like that. And interesting is that also, I'll say, I don't know, we've done Gabrielle and I have done over 1,000 real estate transactions in our career. Okay. Yeah, a lot. Okay. We've done a lot.
There's volume there.
Yeah, and millions of square feet of space, and so. On the leasing side of those transactions, every deal at a certain point has something that could happen that can make the whole thing fall apart. Okay. I don't think there's ever been, I can maybe count like on 1 or 2 hands the amount of deals that didn't have that, right? So there's always something, or there's always something that comes up, and there's always, and there's
Yeah.
and your job never ends. So you've got lawyers involved in the deals being negotiated and the lease is being negotiated, but you need to know how to guide it in the right direction, or see when something's going off, or be able to advise.
Like, you anticipate all of that. But
Yeah.
now with the experience you have, you're
I anticipate
able
it every time. I'm like, oh, lease is coming. I know there's going to be problems. So get ready. This is what we need to do. And sometimes you say, well, let's get all the parties in the room
Okay.
without the lawyers, and let's just figure it out. This is what we're trying to accomplish. Or sometimes it'll, something I find, what I find often works is just get everybody on the phone together. Put all the lawyers on the phone, put everybody on the phone together. Let's go. Let's have a discussion. What are we trying to accomplish here? This is what we want. Make the words and the documents say what we want it to say. We have a deal. We know what we want. We want to rent it at this price, and bring the whole thing back to a human thing where we're not sitting and discussing a bunch of terms that are never going to happen.
Yeah,
right?
I can understand.
You understand?
All right.
And so, but it takes a certain amount of experience to
get it to that position where you can bring everybody on.
And it takes your client trusting you enough to say, okay, I'm gonna override something, or I'm gonna push something a certain way, and and I would say, the same way there's brokers who are better at dealing, there's also lawyers who they do this regularly. They're there to make the deal happen, right?
Yeah.
So you see when a deal starts, oh, well, if this guy's involved, okay, I know I'm in for it, right? And if this guy's involved, well, I know that
it's
going to be like a smooth process, because he needs the deal to happen, right? And so and sometimes you get professionals who are capable of doing it, but it's not their specialty. So then there's all this stuff that are coming up that's not standard practice, and then you start getting
because they're not used to it. And
you start running into problems. Yeah,
okay,
and that's why I like to kind of get involved, like in the process of use one of these three lawyers. Like these are guys that specialize in commercial leases. This is what they do day in and day out. They know what's acceptable. They know what's not acceptable. They know,
and they've seen it. If they've done it for 10 years, like they can see the consequences of doing X, Y, or Z pretty much.
And same thing with any other types of trades, whether it's people who are in construction, people who are in whatever it is. If they specialize in that and they have a specialty in that, you want them there because you're going to save a lot of time.
Yeah, exactly.
Right? You're going to save a lot of time.
That makes sense.
And so, so that's, the phase of, that's the phase of negotiating. So that could take up to 2 months. It could be as fast as 2-3 weeks, and it could be up to 2 months. Same way looking for space could be, from anywhere from 2-3 weeks to 2 months to sometimes a year. I've had clients who, what they were looking for was impossible to find, right? So it's like it could take forever, right? It could take forever, and then from that phase, once the lease is negotiated, we get it signed. Sometimes there's a few other conditions that need to be met. So the lease is signed subject to getting a permit and approval of X, Y, and Z, right? Okay. So then there's just that little piece of that may take a week or two just to get those little stuff done. Bang, we got the permits, everything's in place. Now everything is valid. Make sure the tenant gets his deposit in, make sure his insurance policy is in place, right? And then we can move to the phase of where there's actual occupancy that takes place.
I can understand. All right. Wow. I actually learned quite a lot, actually.
Yeah.
So for the people watching, how can they find you? And could you also remind us of what kind of clients you work with? How can people find you? And that's pretty much it.
Yeah. So we work under the banner of Avis & Young. Strong brand, Canadian brand that's all across Canada. So at avisandyoung.com, the website, you can look for professionals there. You can find me. We have we go under the Instagram handle of Industrial MTL.
It will be in the description below as well.
Will be in the description below, even better. And so Industrial MTL. And we're also on LinkedIn. We're Industrial Montreal. So we have a page there as well. So that's where they can find us and reach out. All of my information is there. So we put all of our information out. Cell phones, emails, everything is on our website. Everything is on our Instagram as well.
And are there like any events you attend that people could actually meet you? Like events you do?
Yeah, we do attend a lot of different events. I don't know public events. I would say, we always go to Cial, which is a food show.
Yeah.
Because there's a lot of food, food related stuff that are there.
Obviously.
We're going to be at the Montreal Real Estate Forum in a few weeks. So people can find us there as well. And we do from time to time and you'll see it on our Instagram. We do run little promotions and stuff at some of the properties that we're promoting. So we'll have little breakfast events or stuff like that. So if you look out on our Instagram, we're always going to post it. There may be a breakfast. Come see the space. Come hang out. Meet us, and you get a sense of who we are, how we work, and.
All right, Shlomo. Appreciate your time. Thank you for coming on.
No problem. My pleasure.